Hi, and good morning. Welcome to today's edition of Market Analysis for today, the 20th of September, Tuesday, the 20th of September. I'm Giovanni Benacour, operator and educator with Vantage Markets. All right, so I'd like to bring your attention to what could be tomorrow's day by the Fed, a 75 basis points increment. That's most likely that what's going to happen. And, obviously, although nations cannot directly control oil prices, they can influence them. Additionally, the most recent indications from some of the key decision makers on the oil market suggests that they want prices to remain above $80. That represents a departure from the long-term hypotheses regarding oil prices, which can be advantageous for energy corporations and their investors. In the past, policymakers have consistently been bent on maintaining oil prices above $60, which encourages producers to drill for more of it while keeping the price of gasoline low enough so as not to harm the economy. Now, this month, OPEC and its allies decided to collectively reduce output for the first time, despite oil prices being above 90 per barrel. Although the reduction is small, it demonstrates that the group is still concerned about falling demand and prices. Additionally, there are indications that American officials have a little higher aim for oil prices and that they are increasingly using their strategic petroleum reserve to control oil prices to improve supplies to and bring down prices. The department, energy department has been selling off from the reserve for months. The sale is anticipated to conclude next month, which raises the issue of when the United States will start purchasing more oil to replenish the reserve. According to a story from last week, when oil prices drop below 80, government may decide to purchase it back. That will suggest that they think $80 is a fair price for oil, or at the very least, a somewhat attractive price for filling storage tanks. The standard grade of oil traded in the United States, West Texas Intermediate, dropped as low as $81 earlier this month. Brent crude, the benchmark for international oil prices, was trading near $91 yesterday. With that being said, let's take a look at what we can expect from the markets in a few moments. And now, real quick, we're seeing at the Nasdaq daily chart, and I've been asked, how do I obtain the pivot point, which is this blue line right here in the middle? Well, I use the Friday's fluctuation for the market, that daily fluctuation. I grab the high, the low, and the close. I add them up and divide them by 3, and that will give me the typical price. And that typical price is what I use as a pivot for the entire week. There's one technical analysis that says that on a Friday, however the market closed or however the market did on Friday, that will most likely roll over to the next week on Monday. So, for example, on Friday, Nasdaq opened at 11,915, and then it closed at 11,958. So therefore, it closed higher, even though the fluctuation was obviously lower than that. But at the close, it closed higher than where it opened. So therefore, the consensus or the thinking is that momentum will be rolled over to the next week on Monday, and that's exactly what we saw yesterday. The market came and opened, it fluctuated lower, but it closed higher. So, and the pivot is the one that has been acting or showing us this sign. Let's take a look at the 30-minute chart, and we see that the pivot is, even though the market didn't come down all the way to the pivot in the Nasdaq, it's showing that's the support area for it. The same token we're going to be using for the rest of the markets. So here we have the S&P 500. On the S&P 500, the pivot point is acting as a support level that we wanted to see that it works, and so it is. It is being respected right now. So now we have here the Dow Jones, the same scenario. Let's go back to 30. And we see that the Dow Jones as well, the pivot is working on that one. So now we have crude oil. Let's take a look at 30 minutes. And crude oil was in a tier of a ranging scenario, is trading below our pivot point, which was acting as a support. So right now we are in a downtrend, or a sell-off in crude oil. $84 is the mark, initially psychological level, but obviously we're looking perhaps going lower to $80. Could that be beginning today and tomorrow? Tomorrow is obviously the inventories day for crude oil, so keep that in mind. So right now crude oil is in a sell-off. Then we have Nat Gas. Nat Gas equally with the crude oil is sell off. 770 has been that support level. Right now it's retracing. Perhaps another leg towards the 760 could be contemplated. Then we have here what is gold. Gold is looking to sustain it, to really keep itself around the pivot point right above 1665 psychological round number. So let's see if that will happen. But as long as the dollar index continues to stay above 110 or even above 110, if that happens to go to fluctuate towards that 110 in the dollar index, we'll see gold perhaps take a hit and come down to 1660. Now I have my 1650 support level. That will be the second leg down towards it, but initially 1660. So we have here silver. Silver was really trading right around the pivot point, and it has broken off of it, coming down towards $19. Then we have here what is copper. Let's trade it 30 minutes. Copper right now is also trading right around our pivot point. Right now I think this is going to continue to do so. Sideways movement. Bitcoin, as long as the Nasdaq gets hit, and we most likely will see that getting hit before tomorrow's Fed decision of 75 basis points. Will they do 100 basis points, one full point? That'll shock the markets, and if that happens, we'll probably see a sell-off. But that the market has been already pricing in that 75 increment high, interest rate hike. But obviously, we have another rate decision later on this year. So let's see what's going to happen, if it's going to be another 75 basis point or waiting for 100 basis points. Let's see what happens tomorrow and the vocabulary that he uses. Let's see now with the euro. Euro is really looking to sustain itself close to parity, but as long as the dollar index continues to stay above 109,500, coming towards the 110, that's going to be difficult. If it comes up to above the 110, taking out the previous high and come to 111, we'll see a euro much lower and gold much lower. All right, guys. Well, this is it for now. Have a fantastic trading day.